Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures little change this morning after the S&P 500 closed out at a record high. That marks the 10th record close in the last 19 trading sessions for the benchmark index. But some on Wall Street are warning on the rally. Bank of America's Michael Hartnett saying the risk of a bubble's on the rise amid an influx of retail trading and increasing liquidity. Plus, President Donald Trump downplayed his clash with Federal Reserve Chairman Jerome Powell. That was over the cost of the Federal Reserve's renovation. The president touring the facility with the chairman and maintaining there was what he said was no tension with the Fed chief. He indicated that problems with the project probably weren't reason enough to fire the central bank head. Trump's visit marked the first time in nearly 2 decades that a president has visited the Federal Reserve. And Intel shares are falling in pre-market trading this morning after its CEO sparked concerns he's more focused on cost-cutting than restoring the chipmaker's technological edge. In its latest earnings, the company said it'll cancel some factory projects and take a more conservative approach to future spending. The CEO called the investments begun under his predecessor excessive and unwise. Let's get a check on stock futures right now on this Friday. We're not seeing much change for the major averages after the S&P closed at a record yesterday, indicating a very slightly higher open, as is the Dow, which has been the laggard as of late, up 48 points. That's where futures are pointing, and futures on the Nasdaq pointing very slightly lower. Let's turn now to our top stories of the day. President Trump making a rare visit to the Federal Reserve, plus futures pointing to gains after the S&P 500 and Nasdaq closed at fresh records, and Intel topping second quarter revenue estimates, capping off a busy week for earnings. Joining me now, senior markets reporter Josh Schaefer, senior reporter Brooke DePalma live at the Nasdaq, and our senior columnist Rick Newman. Rick, let's start with you and President Trump touring renovations that have been underway at the Fed. He again suggested that Powell lower interest rates. Listen to what he said.
Are there things the chairman can say to you today that would make you back off some of the earlier criticism?
Well, I'd love him to lower interest rates. Other than that, what can I tell you?
Awkward chuckles all around, Rick. I mean, this was extraordinary. It's already been an extraordinary back and forth between the two men, but extraordinary to see them both there in hard hats for part of that visit. We saw Powell sort of fact-checking Trump in real time as Trump was talking about some of the figures behind the renovation. What are your thoughts on this visit?
Well, that was some compelling TV, wasn't it? Boy, I'm just on the edge of my seat here. The whole thing was a non-event in terms of monetary policy or anything that has to do with financial markets. Of course, it was important political theater from President Trump's perspective, and he tried to pull this gotcha moment on Powell when he said, well, the cost of your renovation, it's not $2.5 billion, it's actually $3.1 billion. And Powell perked right up. Anybody who hasn't seen this clip needs to check it out. Powell perked right up and said, no, that doesn't sound right. Trump pulled out this piece of paper. We've seen him pull this trick in some of his Oval Office visits with foreign dignitaries and so forth. And Powell pulled out his reading glasses, looked at the piece of paper and said, no, you're counting a building. That's a different project. That's the fact check of Trump in real time. I mean, that was pretty interesting. Powell looked like a serious person who's on the ball, and Trump looked like kind of a joker. So we know that Powell is not going to lower interest rates. He doesn't get to decide. It's the 12 members of the Open Markets Committee. And what Powell could have said when Trump said, I'd love to see lower interest rates, Powell could have said, well, why don't you stop imposing tariffs that are on imports that are going to raise prices? He didn't say that. He was more polite. So the whole event is over, thankfully.
Yeah, exactly. Well, and Powell would never have said that anyway, because he very deliberately has not weighed in on anything having to do with fiscal policy, right? So not surprising to see that. But, you know, there is now this sort of line of thinking that Powell might even be less resistant to cut interest rates because of this pressure here, and reportedly is just really determined that he keep his place until his term is up to sort of signify the independence of the Fed.
Well, I mean, let's stop personalizing this in the person of Jerome Powell. I mean, it's 12 voting members who make monetary policy regarding short-term interest rates, not just Powell alone. The reason Trump has singled out Powell He's setting Powell up to be the villain in case something goes wrong with the economy so that Trump can say in 6 or 8 months, see, I told you all along that Powell needed to lower interest rates. What's actually happening in the real economy is that tariff-related inflation is looking like it might be a little tamer than economists were expecting, including economists at the Federal Reserve might have been expecting a couple of months ago. If that turns out to be true, it gives the Fed a little more headroom to actually cut rates later this year. I mean, it's very likely that the Fed will be gradually cutting interest rates again by the end of the year for market reasons, not because of Trump's hectoring. So Trump is going to get what he wants out of the Federal Reserve eventually. It's not going to be as dramatic as Trump wants, but they are likely to start cutting, not because Trump wants them to, but because market conditions may allow it.
Yes, we'll see when that actually ends up happening. Likely not next week when they meet. Rick, thanks a lot. Appreciate it.
Thanks, Julie.
Guys, let's move on to some of the other things that we've been watching in the markets, and namely earnings, right? We've got these earnings backdrop at the same time that we got stocks trading near records here. Brooke, you're looking at the sort of momentum that we've been seeing in stocks.
Yeah, certainly. What we've seen is stock futures set to open yet again after they hit a record high yesterday afternoon. And there's really some factors that are really playing into this that are leading to what we've seen in this past quarterly report. According to one stat that I read today, 83% of companies have exceeded analyst profit estimates. And that's really important to note here because heading into the second quarterly earnings season, so to say, there was so much pessimism, worry, fear on the street that these companies would take a major hit because of tariffs. But as we've seen this sort of play out, as those tariff deadlines have sort of moved past and if trade deals have come to fruition, there's this ultimate, calming appeal of investors sort of turning a blind eye, so to say, on these trade deals and really focusing on these companies outperforming expectations. And that's largely what we've seen over the past week. We heard from Google, who's investing in AI, and investors were certainly pleased there. In addition to that, we've also heard that there has been this resilient consumer. I spoke to Coca-Cola CFO earlier this week, and that's what he told me, that the U.S. consumer remains resilient despite the fact that what we've heard over the past few years continues, that low-income consumer is still under pressure. But it's important to note here that what we've seen in this past quarterly report is a far different story than what we heard going in.
Right, definitely. Well, Josh, as we look at the sort of some of the individualized earnings reactions as well, I know you've been crunching the data all week in terms of what the reactions are given what we hear from these companies.
Actually, it's been interesting, right? So I think from a broad sense, people would argue the S&P 500 earnings are going quite well. Of course, you're beating, right? That's sort of the typical trend. But what you are seeing is a miss is getting punished right now, which I think strategists would largely argue is probably relatively healthy, right? You take a look at two big stocks yesterday. You saw Chipotle fall double digits after same-store sales declined again. Then you take a look at Tesla. Tesla had automotive revenue decline 16% year over year. That stock closed down, I think, about 8 or 9% yesterday. So you are seeing some rational behavior in this market. We've spent a lot of this week talking about meme stocks, talking about different things that feel go, go, go right now. But if you're missing earnings, it is coming to punish you, right? And so that has been an interesting trend to watch, of course, as we think about really the wide swath of earnings we're going to get next week, right? You're thinking about a lot more of big tech and a lot more of the S&P 500 coming. Right now, it has been an environment where if you miss with the market at record highs, you are definitely getting punished, at least from a stock price perspective on that one-day move.
And just to linger for another moment on the Jay Powell, Donald Trump situation, guys. Josh, what's been interesting is it seems as though Donald Trump is talking to some audience, but that audience right now doesn't appear to be the market.
It's not the market, right? And you're not seeing rates move that much, right? And I think as from an investor perspective, Julie, that's sort of what matters here, right? Is how much is the 10-year moving? How much is the 30-year moving on some of these comments, because that's been what eventually becomes a headwind for stocks, right? You mentioned Michael Hartnett's note from Bank of America, the chief strategist over there at the top of the show. And what Hartnett signaled is he said it's risk on until bond yields rise to levels that trigger lower bank stocks. He's arguing that a 30-year yield above 5.1% would be one of those levels. We've also talked to strategists that talk about 4.5%. on the 10-year, but you take a look at both the 10-year and the 30-year really over the last month now, they've essentially moved within a 10 basis point range. And when we talk about interest rates, sort of the key is volatility, right? You have a lot of rhetoric coming out from the president in terms of interest rates. The fear would be that that would cause a lot of interest rate volatility. You look at something like the MOVE Index, which is sort of the VIX, the volatility measure of the 10-year Treasury yield, it's going down. Like, we are not seeing a lot of volatility in terms of the rate market. And I think when you sort of wonder how are stocks just continuing to float higher, I think we hit 4 straight records for the S&P 500. We're indicating to perhaps hit another one today. A lot of trading to happen, but it seems like you might get 5 straight records for the S&P 500 throughout the week. There hasn't been a lot of economic data. You're sort of watching rates not go anywhere, and that's a good position for stocks to just sort of drift higher. We haven't had big moves this week, but it's just been moving a little bit higher because a lot of those headwinds, rate volatility being one of them, has not been present in this market at this point.
Yeah, the so-called melt up, Josh, right? All right, Josh Brook, thank you very much. The FCC approving an $8 billion merger between Paramount and Skydance that's now expected to close in the next few weeks following years of turmoil. Yahoo Finance's Ali Canal has been tracking all of this. So, Ali, looks like this finally had to happen after what Stephen Colbert famously called a bribe shortly before his show was canceled. But this is now, they got that FCC green light.
Yes, after more than 250 days, Julie, we finally have this FCC sign off. And you were just alluding to the Stephen Colbert late night show cancellation. A lot of drama leading up to this moment. We had that. We had Donald Trump and Paramount settlement over the Kamala Harris 60 Minutes interview. And then we had that South Park episode, that parody episode, really documenting it all here. So it's been this drama-fueled journey to get to the finish line. But there's still a lot of question marks here when it comes to the future of Paramount, and really at a time when you're contemplating the future of legacy media at large. There was a new note from MoffettNathanson last night after this news broke, really highlighting some of that work ahead. Analyst Robert Fishman raised questions about the future of the company's business model. What happens to Paramount Plus, especially at a time when subscriber growth has really stalled? Is Skydance going to significantly invest money into some of those more aging franchises? And how will the company handle some of those looming renegotiations with the NFL at a time when sports rights are becoming a lot more expensive? Fishman also brought up the future of CBS, Paramount's linear cable networks, where revenue there continues to decline. There is a chance that we could see more spinoffs or divestitures, which really we've seen across the broader landscape there. NBC Universal is set to spin off most of its cable properties at the end of this year. Warner Brothers Discovery is planning to do the same. Both of those legacy media giants really effectively splitting the less profitable linear side from streaming studios. These are considered more of the growth drivers here for the future. But we did get some surprising news this week from the Wall Street Journal that NBC is reportedly considering launching a new sports-centric cable network, perhaps to directly compete more with ESPN. But that's interesting at a time, again, when linear network revenues are just continuing to fall. Ad revenue is not flowing to that side. It's going more to the streaming side. And we have many media companies just pulling back in general when it comes to their business model. So the bottom line here is that the Paramount Skydance merger, a hurdle that is cleared, but we're seeing just this reimagining of the landscape in real time, whether that be just completely new business models or potentially full-blown breakups. And you're not seeing too much reaction in shares right now. We're up about 1.5% in early trading at this point ahead of the open, but a lot of that was already priced in.
Yeah, definitely. And it seems like there's no end of turmoil in sight, even with this deal getting done soon. Thanks a lot, Ali. Coming up, we'll count you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's trending tickers. 3 that we're watching include Centene, Synovus, and Deckers. First up, we got Centene. It's cutting its annual guidance and reporting a surprise quarterly loss. The shares, though, on the rise. It's a little confounding, up 3%. The company's earnings call on it, its CEO said that they expect 2025 adjusted earnings of about $1.75 per share. That's far less than the more than $7.25 a share that Centene had projected earlier in the year, according to Bloomberg. Centene had pulled its 2025 guidance earlier this month, citing precipitously rising risks in the ACA business. Next, Synovus plunging along with Pinnacle after the two regional banks announced an $8.6 billion deal. Pinnacle agreed to buy the bank in an all-stock transaction, which combines two sizable players in the U.S. Southeast market. Synovus Chief Executive Officer Kevin Blair will become CEO of the combined entity, and Terry Turner, who has been CEO of Pinnacle since its founding in 2000, will serve as the chairman. The combined entity will be operated under the Pinnacle brand. That merger, the biggest bank deal to be announced so far this year. And Deckers, the company behind brands like UGG and Hoka, soaring following its latest earnings report. Net sales for both brands surpassed analysts' estimates in the fiscal first quarter ended June 30th. UGG sales up about 19% from a year ago, while Hoka was up about 20%. That stock, though, had fallen about 48% this year through Thursday's close. The last earnings report had been a bit disappointing. And you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, Michael Saylor's strategy kicked off the crypto treasury trend back in 2020, acquiring large amounts of Bitcoin as part of its reserves. Now, dozens of companies have followed suit, especially recently. Digital asset-focused financial services firm Galaxy Digital has helped companies like BitMine, GameStop, AMC, and more build out their crypto treasury projects. And Steve Kurtz, global head of asset management at Galaxy Digital, is joining me now. Thanks for being here.
Thank you so much for having me. Good morning.
So obviously, Strategy is the sort of best known company that has done this and has also, by a pretty wide margin, the largest amount of Bitcoin on its balance sheet. Is this just a situation where the trend is following price? You know, all these companies are interested in doing this as they see prices going up more?
You know, that would be the cynical take. I don't think so. I think that this is about 2025 being the year of public markets and crypto colliding. And I think that is partly these treasury companies. It's partly companies like Galaxy and Circle going public in the US. But when you step back and look at how much money has been deployed, which is less than $20 billion into these treasury holding companies, it's actually a drop in the bucket in terms of the US public markets. And so while there may end up being some of these that don't make sense or certain ideas that aren't going to work out, I really think that this is the beginning of a much bigger narrative that includes other public company ideas that we haven't even seen yet.
You know, a few years ago, this kind of breadth of companies doing this would be unthinkable, right? Bitcoin is still, and other crypto, it's still a very, well, maybe you guys thought of it, but most companies, most traditional establishment companies, this is still not something they're going to consider. And part of the reason why is because cryptocurrency is very volatile. And so it can be more difficult to manage one's balance sheet with a very volatile asset on it. So when you guys are counseling these companies, what do you tell them about how to manage that?
Sure. Well, one size doesn't fit all, obviously. And yes, you're right. In some ways, we built Galaxy exactly for this moment, this intersection of traditional finance and crypto finance. And it's true that there is volatility in crypto. I think there's a really different story for putting Bitcoin on your balance sheet if you have a perspective on monetary policy, the deficit, which you've talked about already this morning in the program, than if you are really focusing on one part of an ecosystem. So one of the most interesting parts of the last month has been that we haven't really seen an ETH-driven crypto rally in some time. So ETH is up over 50% in 30 days, and that's largely driven by the narrative of ETH coming to Wall Street through these treasury companies. That's a very different narrative than the Bitcoin as digital gold or a hedge against the system narrative. That's how is the on-chain economy growing? What is Ethereum doing as a part of that? And so our job when we're counseling companies around Ethereum, for instance, is not only helping them access Ethereum properly, but also how do we optimize and generate yield within the treasury, which could include option strategies. It could include DeFi-driven yield. It could just include staking, which actually secures the Ethereum network and offers yield above what, for instance, an ETH ETF would offer.
Do you think that Ethereum at some point is going to be the more dominant asset on company balance sheets for some of these reasons?
Well, I'm not sure about that because Bitcoin is such a developed story and has really a place in the macro asset lexicon. But I do think that the ETH narrative starts to unlock the crypto narrative. And I think for a very long time, one of the reasons crypto has been volatile is that adoption has been limited to the crypto sandbox. And this public markets construct is allowing crypto to break out of the sandbox. When we talk about an ETF for Solana or other assets, you're still limiting what Solana or Ethereum or Sui or many other ecosystems were meant to do in crypto. And so having the ability to create a company that isn't so narrowly defined by an ETF rule, but can actually allow for that ecosystem to grow and develop and invest, that's the dream of phase 2 for a lot of these crypto companies.
Steve, most of the companies that have added this on their balance sheet are sort of fintech or crypto adjacent, right? Is there a point in this cycle where we see companies that don't have anything to do with it that are adding it?
I think so. Yeah, and I think you're seeing that shift. So it started with Bitcoin, and of course, it's moving to other coins. You've also seen someone like Reserve One come out with a very novel, diversified group of coins. But when you put it all together, we're well over 200 companies globally that have crypto on their balance sheet. That's not just public companies; it's also private companies. We're talking to really normal looking real estate businesses, for instance, as one example that is very different than just a company trying to take a shell and put one asset in it.
Steve, thanks a lot for your time this morning. Appreciate it.
Thanks so much for having me.
Coming up on Yahoo Finance, we've got Opening Bid executive editor Brian Sozzi, who doubles as the host of that show, joining us now. Soz, what's coming up?
Yeah, Julie, of course, we're going to keep digging into that duel of the hard hats between the Federal Reserve Chairman and President Trump. I mean, just remarkable scenery. Also going to dig into all things Intel after their absolutely ugly quarter, but also, I would argue, Julie, ugly earnings call. And stock of the day, we're going to really key in on TKO Group off of the untimely passing of Hulk Hogan. So lots going on here in Opening Bid.
Yeah, I know you're a wrestling fan, so I'll be curious to see it from the both personal and analytical side of that discussion. Thanks a lot, Soz. That does it for Morning Brief. Much more ahead on Yahoo Finance.